Here is how an investment banker breaks down a daily global silver trading session. We'll look at today's, April 8th, 2026. First, the takeaway. Today, silver did not just go up. It was walked higher, session by session, region by region, across the three markets that actually matter, Asia, London, and New York. And if you follow the flow carefully, you can see exactly how it happened. We start in Asia. Overnight on the Shanghai Gold Exchange, silver opened right around $72.10. Nothing explosive, no headlines, just a steady mechanical bid. And every time price dipped, it was bought, not aggressively, but consistently. By the time Shanghai closed, silver was trading closer to $72.70. That's important because Shanghai wasn't chasing price. It was absorbing supply, and more importantly, it was trading at a premium to London. That tells you something simple. Physical linked demand was already stronger than paper supply before Europe even woke up. Then London opens, and this is where things changed. On the London Bullion Market Association, silver starts the session just under $73. Then we hit the midday auction, the LBMA silver fix. And the auction doesn't clear cleanly. Price has to move higher and higher and higher before sellers finally show up. The fix ultimately prints around $73.65. Almost immediately, the market extends to $73.95. That's not random. That is buy-side imbalance. Participants in that auction include firms like JPMorgan Chase, Goldman Sachs, Morgan Stanley. And today, one thing was clear. There were more buyers than sellers at every price level, which means London didn't just trade silver, it repriced the offer. And that set the stage for New York. By the time the U.S. session begins on the CME Group, silver is already sitting at just under $74. And then the real move starts. Right after the open, large blocks hit the tape, hundreds of contracts at a time, then thousands. Within minutes, you're looking at millions of ounces trading hands. And this is not retail. This is institutional flow, funds, systematic strategies, execution desks. And then it happens. Silver breaks $74. That level matters because above it, dealers are offside. They're short gamma, which means as price rises, they have to buy more silver to hedge. And that creates a feedback loop. Price accelerates, liquidity disappears, and silver spikes to an intraday high of $74.80. But then something changes. The rally stops. No blow off, no panic buying. Instead, silver drifts back down and then settles right around $74.10. But why? Well, there's three reasons. First, arbitrage desks step in. Firms like Jane Street start selling futures that have gotten too rich relative to spot. And second, fast money takes profit. This was a clean, fast move. And desks get paid to take those gains. And third, physical demand doesn't follow through in New York because London already cleared the bulk of it. Now, here's the stat that matters more than anything else today. Price was up and open interest was up. Got that? Open interest up. That means this was not short covering. This was new positioning. New money entering the silver market at higher prices. So let's bring it all together. Silver opened the global session around $72.05 and it closed around $74.10. That's a move of just over $2 or roughly 2.7% on the day. But the move itself is not the story. The story is how it happened. Asia set the floor with steady demand. London tightened supply and forced price discovery higher. New York triggered momentum and broke key levels and pulled in new buyers. So what's that mean for tomorrow? Going into April 9th, 2026, the market is now carrying fresh long positioning at elevated levels. And that changes the playbook. If Asia comes in and defends $73.80 to about $74, expect continuation. Momentum funds re-engage. Dealers remain in buy to hedge mode. And the path of least resistance is the $75 plus test. But if that level fails early, you should expect a fast unwind of weak longs, reversion towards 72.80 or 73.20 liquidity zone, and a much more two-way volatile session. Either way, tomorrow is not about direction. It's about whether today's buyers have conviction. As always, build that stack. iBankerU. Good day